Hi there, it's Trisha, and I wanted to go over the trades for Wednesday, February 11th. I did not take any trades, and as most of you know, I am re-recording this because for some reason sound did not record on the one that I uploaded to YouTube. So anyway, redoing this, I used two trade setups, one off a longer tick chart, one off a smaller tick chart, using three charts with indicators for confirmation before ever getting into a trade. Conservative way to trade, but it works for me, not for everybody, but it is for me. A lot of people like to take 10 or 15 trades a day. You won't get that with these setups. You'll get 2 to 5 setups per day. So anyway, you can check those out at www.easyemintrade.com. And like I said, no trades for me today, but we more than make up for it on days when we do have our setups. And I'll show you why I didn't take any trades today. First off, this is our smaller minute chart with our trend indicator at the bottom. That's our green line at the bottom. And you can see that on this chart, we barely have any time that we've spent above that 20 mark. So as you know, I require this trend indicator to be above 20 or at least close to 20 and rising before ever taking a trade. So there were a couple small little spots where we did get above 20, but when you drill down to our entry chart, we didn't really have anything setting up. And I'm going to show you why we didn't have anything really setting up. This is our longer tick chart, and you can see up here everything is just kind of going in a very small range. You've got nothing really going on above both moving averages or below both moving averages. So it's just kind of, bouncing back and forth here. And majority of the time, as you know, I like my price to be above both moving averages or below both moving averages, even for the scalps. I mean, I will take a scalp if price is in between two moving averages, but as I've explained before, I want to see some room to move. So if there's only, let's say, 3 points difference in between the two moving averages and something sets up, I'm not going to take it because usually once it hits that moving average, you're going to get a stall or a pullback. So that's just not a high odds trade. Now, if there were, 6 to 8 points in between the two moving averages and I had something set up, I always want to be below the white one, always, or above the white one, always, always, always. So in this instance, if we got a short that's set up and we had 6 to 8 points in between the two moving averages, I would take a scalp if it's set up, but we didn't have that. Also, the yellow line is the close from the day before, so you can see that a lot of price action stall right there as well. So just not a high odds of anything going to happen until we either break higher or break lower. So until then, we just sit back and we wait for something to happen. So in looking at our smaller minute chart again, back here at, I think it was about 146, that's when we finally got a break of the trend indicator where we could actually start looking for trades. So we look for a trade, and I want to show this one. This is one right where our trend indicator was actually, going above the 20 mark. This magenta line is a trade that's set up for a scalp, but you can see that our indicator here is already oversold and going sideways. So we're not coming from divergence, and we're not just coming from overbought and moving down. So I would pass on this trade. Now, if we had divergence and we were just coming into oversold, or we're in oversold just for a brief period, I would take that. But you can't really take it, because it's already going sideways and oversold. So that's just something that I would pass on. As I've said, I don't mind not having divergence, but I just want to see it just coming from overbought and moving down before it gets to oversold if I'm going to take a short, and vice versa for long. So that's why you would pass on that trade. I think it's important for me to show you the trades that I pass on as well, not just the trades that I take. In taking a trade, most people are looking for reasons to take the trade, and I'm actually doing the opposite. I'm looking at the setups and I'm looking for reasons not to take the trade. And when I can't come up with any reason why I shouldn't take the trade, then I take the trade. So it doesn't sound like there would be much difference in what I just said, but your actually your mentality is a little bit different when you're looking for reasons to take a trade, because usually you're going to maybe see things that aren't quite there, and maybe not wait for all of your indicators to be in alignment, looking for a reason to take the trade. Whereas if you're looking for a reason not to take the trade, you will notice all the reasons why you wouldn't take the trade, like what's not in alignment, what's not set up right. And so it's just easier to pass. Okay, I'm not going to take this trade because so-and-so. So, that's just how I view it, and it works for me in approaching it that way. Then at 2:13, you actually had a scalp setting up here for a short, and you have divergence on price, divergence on the indicator, and right here is where it would set up short. Now, the reason why you wouldn't take that is because right here on our longer tick chart, this is the bar that short is setting up on this one right here. This is where it's setting up. And you can see that we have the low from the day before right below it. So in my opinion, that's just not a high odds trade. A better way to take that trade would be for it to break the low from the day before and then look for a setup on our smaller tick chart, because realistically there's not going to be a lot of room to move here. So that's what we would want to do. We'd want to wait until we actually broke the low from the day before and then look for a setup. Now you certainly can take this because everything was in alignment to take it, but you need to just be aware that this low from the day before is right below you, and you might want to maybe set your exit as a limit order, maybe at half a point or 3/4 of a point away from the low of that day before, just so you'll get filled before it bounces back up again. Because obviously if you take that trade thinking it's going to break below there, you wouldn't have gotten it, and then you would have bounced, and then you would have got stopped out. So, that again, that's just not a high odds trade, and I would pass on it. And again, that's just my opinion. I did also want to show you on our longer tick chart here, when we break this trend line here, we actually will close below the trend line on this bar here. But again, we don't really have anything setting up when we drill down to our longer tick chart. So, and again, you just need to be aware that you've got the low from the day before there. So those are all things that I consider when I'm taking a trade. And then, then we bounce back up. And, again, you have to be, for me, in an uptrend to take a long, or like I said, I'd like to be above both moving averages. So at the point that we get above both moving averages, we really don't go anywhere. We're above both moving averages, but we really don't have anything set up. And you have to be aware that you've got this trend line above you as well. So again, just not a high odds environment today on this day for trading. This was Wednesday, February 11th. So those are things that I look for and why I didn't take any trades. But of course, if you have something that you saw that you felt comfortable in, like I said, you could have taken this trade here, which was this one here, and you would have got really small gain, but you would have had a gain anyway. So anyway, that's my reasoning behind not taking any trades. So you can go to www.easyemintrade.com and check those out.